Well, hello everybody, and welcome to a brand new edition of Hawk's Scan Sentry Report. I am Hawk Arps, Vice President of Jan Arps Traders Toolbox, and this is the Scan Sentry Report for the week beginning the 24th of June. Woo doggies, we had some fun trading last week. I hope you did too. The FOMC and all of the collapse of the world markets that ensued after that announcement. Well, let's take a look, see what the charts are looking like at this point, and see if we can see anything that might be a tradable opportunity coming into the next week. Let's just take a look at the S&P 500 index, the daily chart. We made a high, of course, on the 22nd of May. This high was accurately identified by the Arps Trend Exhaustion 2 tool, giving us a good warning that it was time to get out of that rally. And since then, we've seen that on Thursday, the price closed below our uptrend line. On the same day, we got a bearish pullback 23. So Thursday, we got a great sell signal. And we can see that our wave counter has identified this as the end of the pattern. You can see there's wave 1, 2, 3, 4, 5. You see wave 5 right in here. There we go, wave 5. We came down A, B, C reversal. So we don't know if we're at the end of this C wave, but regardless, it's probably the end of the up move for a little while. All of our trenders are bearish on the triple trender. However, note we are sitting right here at this resistance level. We've crossed below it, and it could give us a little resistance. I do note that our previous lows in the fear greed have been breached, those lows being negative 35.78. We're below that now at negative 43. So it looks like there's a lot more selling than buying going on, and there's increased selling. This would indicate that the overall move is likely to continue to the downside. You can see we have a bearish trend strength index here in radar 3 as well. It's been bearish since, let's say late May, it looks like. So we're seeing more move to the downside here. Now, whether that's going to happen this week or not, you can't really tell from the daily chart. So let's drill down to an intraday chart. As many of you know, I like to look at the 50,000 share S&P futures contract chart for some of my intraday analysis. And what we see here is, of course, this nice move down, very beautiful little trend on Thursday, which was a perfect opportunity to buy these pullbacks, which we were doing. And price, of course, slowed down on Friday, kind of started moving sideways, still sideways to down. But note this beautiful pullback divergence here in the radar 1 fear greed indicator, where from this pullback to here we had higher highs in the oscillator, where we had lower highs in the price right here. Now then note the higher highs in the price right here, yet it's still lower than this high here. Yet we had lower highs in the oscillator at this point, giving us a beautiful bearish pivot divergence combining with this pullback divergence, which gives us a good signal that this is a continued pullback in this downtrend. So we're looking for this to keep going down. You can see all three of our triple trenders are bearish, and our trend strength index is not confirming a bearish strength. It's the pink histograms are pointing up, but at least they're pink. So we're looking for these to cross the zero line, and as we drill down to a shorter term chart, we may find entry signals to the downside already presenting themselves. Let's take a look at the gold charts. As we know, gold has been in the downtrend all year, and it is still quite convincingly bearish. You can see the triple trender is all bearish here. The Radar 3 trend strength is bearish, including the Radar 2 price leader. It's showing deceleration still. Radar 1 fear greed is still showing more selling than buying. Although if we do see a turnaround at these lows, we will have a beautiful pivot divergence giving us an indication it's time to buy gold and hopefully watch it move to the upside. We don't have this divergence confirmed yet because this valley is not completed yet in the Radar 1 fear greed indicator, so we're not seeing a buy opportunity yet, but we'll be looking out for one. What we do see here is a breakout of the resistance level formed by the downtrend line as well as the one formed by the support resistance line. So you can see the downtrend line gave us this breakout to the downside right there on Thursday. So the daily chart's looking quite bearish. Looking at our intraday chart, we do see something pretty interesting here. After the nice drop on Thursday, pretty serious ride to the downside, we saw one more thrust down after it made these lows. We tested the stops, ran a bunch of stops, and you can see we're currently here at the same support level, right about there. I mean, it broke through that, tested it, and now it's up above that. But the interesting thing is that on this second test, we got this beautiful bullish divergence with Radar 1 fear greed. Notice how weak the selling was on this last little thrust down here. And here the buying and selling is kind of vacillating back and forth. It looks like a pretty even tug of war. The trend strength index is bullish at this point, so we can combine that with these triple trenders in this sideways moving market and this pivot divergence to the upside to look for a potential buying opportunity here in the shorter term gold market. Another one of the markets I like to trade, the CL, the crazy lady as I call her, crude oil. And this market has honestly been kind of moving sideways most of the year, ranging, as I've noted, between about 98 and 91, 91.34 is what our support resistance line says. We did make a low here at 87.58 and a high at 99.71 at the beginning of the year. But really, if you look at it, we've kind of been range bound from about here to about here. This is where most of the money is in crude oil right now. And the way I see it is I don't see any strong indication that that's changing. Crude happened to be near these highs when everything started selling off, and they're selling off, but it's still within this range. It's not like it's in a big downtrend as far as I can tell. There's more selling now than there has been in the recent past, so I do expect this sell-off to continue. You can see the Radar 3 trend strength is showing bullish strength, but the Radar 2 price leader is showing deceleration. So I'm looking for this to move down at least into this 91.34 range, possibly all the way down to 87.58. Now, if we drill down to a shorter term chart, we see here the nice down move when everything started selling off on Thursday. When they pulled, they said they might pull the plug on the free money, so things are selling off. You can see we got these nice pullback 1, 2, 3, trend exhaustion 1, 2, 3 with the pullback 23 and the overbought trend exhaustion 1. Nice pullback divergence to the downside. We recently got another one right here, so we're happy to see this pullback to the downtrend line. It's a selling opportunity for us. I don't see any reason to buy here. There's no divergences at these lows. Trend strength is very bearish. You can see we marked this pullback divergence in the Radar 2 price leader right there. So we're looking for this cross of the fast line over the slow line to confirm a sell opportunity in crude oil. I want to thank you for taking your time to watch this video presentation, and I hope you got something good out of it. I want to remind you that We are not recommending that you buy or sell any of the securities mentioned today. The Arps Traders Toolbox is not an advisory service. All of the examples we're presenting today are for purely educational purposes. In fact, I just want to remind you, as if you didn't already know, that trading futures contracts, equities, forex, the markets are dangerous, especially to your accounts. So never trade more than you can afford to lose, and remember, your chances are going to be much better if you have good technical analysis tools to help you. So with the aid of some of the tools we talked about today, may the trend be with you.